So you want to know what a reverse split is within the stock market. Is this a good or bad thing? Should I be worried? Well, let me ask you one question. Do you want to sleep peacefully at night? Or do you want the constant fear that when you wake up, all your money has just disappeared? Poe didn't know it. Cause let me Because let me tell you one thing. The stock market is full. Why? I can't stop. Because let me tell you one thing. The stock market is full of corporations that will take everything you own, even your soul. Now that the mood's set, let's get into it. One thing that people tend to forget is, yeah, we're dealing with stocks and money, but you can't be so serious all the time. It is very stressful, but you gotta keep a loose environment and just really enjoy the journey. Now with that said, let's get into the serious shit. So the stock we're taking a look at today is ticker symbol HMNY. And by the look of the website, I'm impressed. Not only by the fancy visuals, but the intellectual words grouped together. Do you have any idea how many points I scored in Scrabble? What are you hiding behind your fancy visuals and intellectual words, HMNY? Gotcha, b****. So joking aside, what exactly is a reverse split? Well, to give a little bit of background, every stock that's trading within the market has an amount of shares that are offered to the public. This is either going to create it to be a low float or a large float. With low float, we see these stocks that could be $1, and then in one day of trading, they go up to $20. Normally, it's part of a pump and dump scam, but it's because they have a low amount of shares that are available to the public. Any type of buying and selling, even if it was just very minimal, is going to move the stock drastically. If a stock has a large float, as we see right here we have the bid and the size, and then also the ask and the size. Now with the numbers that are here, you want to add 2 zeros to it. So for it to fall below this price on the bid, 25,000 shares must be sold. And then looking at the ask, you need 49,700 shares to be bought. Now with this example, this would be a large float. We have a large amount of shares that are on the bid and the ask, which makes it very difficult for there to be any type of movement. Now also we have to look at the requirements of the market. Now for the New York Stock Exchange, a stock must trade for an extended period of time above $1. Now, as we see here, HMNY is drastically below $1. But what occurs is they get a warning from the New York Stock Exchange saying, hey, your price has fallen below our requirement. A lot of these stocks are going to find a way to get a waiver and an extension to give them more time to actually acquire that dollar amount. Now, everyone's looking for that big hot stock where, hey, if I put $1,000 into it, it's going to go up 1,000,000%, and one and done, I'm done. And I was just looking around, taking a look at different stocks, and of course HMNY is one of the lowest selling stocks on the market currently listed. I was just looking at the daily. Now if we look up here, I have my whole daily chart. This is daily, so it's broken down. We have June, we have July, we have August. This is where I have my 1 minute chart. Now, so I'm looking through, we see the highs, 20 cents, 30 cents, it's going into the teens. And next thing you know, it goes from a high of 10 cents and a half to almost $15. Now, of course, I want to think, hey, they found, the fountain of youth. Probably didn't happen, and in this case did happen. So I resort to the other one that's more likely to happen, which would be, did a reverse split occur? And in this case, yes, there was a reverse split that took place on the 25th of July. Now, for all those people that want to make a lot of money off the one stock, I'm just going to break it down for you real quick. So let's take a look at HMNY. Now, I have the numbers. I already did the calculations and everything. Let's say you wanted to put $5,000 into this one stock, right? $5,000. And hell, at 11 cents, if it goes up to $1, I mean, we basically made $45,000. And what's $1? It can make it to $1, right? So here's the calculations. $5,000 we'll round it to 11 cents a share. 10.5, 11 cents a share. you have a little over 45,000 shares, right? Now, the reverse split that took place, it could be multiple variations. It could be a 10 to 1, it could be 100 to 1, 500 to 1, 1,000 to 1. In this case, it was 250 to 1. So every 250 shares that you have, they'll give you 1 in return. Seems fair. Now, as soon as market opened, your shares went from over 45,000 to 182 shares. But hey, it's almost $15. So that's awesome, right? Sure. Your 182 shares are now worth, and I'll even be nice, 15. You're not going to sell it at the high, I tell you that. But let's say you did somehow get it at $14.98. I'll make it 15. I'll be nice. So your 182 shares at $15 is going to be $2,730. So you went from $5,000 to $2,730 overnight. Okay, I like where this is going. Let's keep doing it. Now let's be more realistic. Now, unless you're watching the stock constantly, which you're normally not. If you're long in a stock, you might check up on it every 2 to 3 days or whatever. And that's fine. That's what a lot of people do. But let's say that you sold at around $10. So you heard about the spike, you didn't get into it. And then the next day you're like, fine, it's not going to go high. I thought it was going to go higher, but it didn't go higher. So I guess I'll just share my stock and take the loss. So you sell at $10. 182 shares at $10, $1,820, right? So $5,000 to $1,820. So basically in one day, you just lost $3,180. Now everyone's really interested in the penny stocks, and I mean, I understand why. You could get thousands of shares for like $10, but you gotta think about it. Everyone can do the same thing, and with the high float that we see here with the bid and the ask, I mean, your 1,000 shares or 10,000 shares or whatever really isn't moving the stock whatsoever. Another thing that you want to keep in mind is with stocks like this or any stock that's really under $10, you don't have corporate stock market traders actually looking at it to maintain like a healthy balance. You're really just having a bunch of novice traders that really want to push a lot of weight into these stocks because, hey, they're really cheap and, you know, I can make a quick buck off of it. And it's not very healthy because the movement of these stocks, as you can see here, I mean, granted, this is only 2 cents, 1 cent, but I mean, you're getting these large spikes that goes down. You're getting a large spike and it's just going back down. It's very undecided. It's very choppy. And then next thing you know, you're going to hit into a reverse split and you're going to lose all of your money. Now, I don't make these videos to target anybody or make fun of anybody, because this is something that happens very often. You know, people want to find something that they're going to make a lot of money in. They hear the stock market. You know, you can make a lot of money, but you just want to be smart about it. Do your own research. Don't rely on someone to tell you, hey, this is going to be the next stock, or, you know, you should invest in this. You don't want the fear of missing out, the FOMO, because a lot of people get that, and a lot of people are going to lose a lot of money in doing so. If you enjoyed this video, please like, please subscribe. I'm going to have more content in the future. Let me know if this is something that you run into, or maybe what videos you'd like to see next. Again, this is Jonathan with Lone Wolf Day Trading. Stay green.